My name is Charles Hamilton. I am the head of the European programmes in Invest Northern Ireland. Invest in Northern Ireland was appointed as an intermediate body by the managing authority with responsibility for €254 million of ERDF support over a 7-year period of the programme. Within that, financial instruments have been allocated just short of £100 million, so approximately 35% of the Northern Ireland operational programme. There was a need for additional support to be provided through financial instruments because of the small venture capital market which Northern Ireland had. To confirm this, an ex-ante assessment as required by EU regulations was conducted. This was run by the managing authority with input from ourselves. An independent company was appointed to undertake the ex-ante, which we were very pleased to see confirmed the previous market analysis. The investment strategy for financial instruments that we established, having done the ex-ante assessment on what the requirements were for Northern Ireland, covers us basically from putting in £50,000 of support right the way up to £3 million. We appointed fund managers. Each fund was separately tendered, and when the tender was procured and confirmed, the fund manager was then appointed. So no particular sectors are targeted. However, the fund managers tend to focus on technology-based companies because that is the area where the highest growth and innovation potential is seen. Investments are made by the fund managers. Invest Northern Ireland does not get involved in how the investments or what investments are made. However, because we have a relationship, an ongoing relationship with the companies, as well as the support from financial instruments, they would receive assistance from advice and guidance through mentoring. We have found that financial instruments are the most flexible form of support that you can put into a business. So from the business point of view, the money is with them right at the start to be utilised. From an intermediate body perspective, the potential is there for the money to be returned to us through recycling. That recycling can be done through a trade sale or through an initial public offering of the business on the stock market. That helps with the sustainability of the funding, which means for the same amount of money, you can actually provide more support than you could with a grant. With financial instruments, we would always say, focus on the potential for the investment. Don't focus on the concerns of failure. Because from an intermediate body or a managing authority perspective, if you've handed out the money as a grant, you're never going to see it back. If you've handed out the money as a financial instrument, the potential is there for the money to be returned so that you can use it more and more to help further economic development opportunities.